Do not make these investment mistakes in 2022. Heading into 2022, investors face a huge set of unknowns. From inflationary concerns to rising interest rates, to what some would call an overvalued stock market. In this market environment, there are plenty of mistakes that investors should seek to avoid. Overreacting to a market sell-off. If you're an investor in the stock market, you should know that corrections, or sell-offs, of at least 10% are inevitable. Since then, the market has gone more or less straight up, prompting many analysts to warn of an impending correction. But even if that correction comes, you shouldn't panic putting all your money into crypto. Even if you're a conservative investor, there's just no way of avoiding all the chatter about cryptocurrency these days. Reports of unfathomable gains in the crypto sector dominate the financial news, with whimsically named tokens like Shiba Inu posting returns of 43% million in 2021 alone. Hearing of these types of returns, investors looking for a quick buck are understandably drawn to cryptocurrency. While there's nothing wrong with investing the speculative portion of your portfolio in crypto, putting your whole nest egg there, or into any single investment, for that matter, is courting ridiculously high levels of risk. Trading at a high-cost broker. In 2022, there's no need whatsoever to conduct your trading at a high-cost broker. In addition to the countless online brokers like Robinhood and SoFi that allow you to trade stocks for free. In this type of environment, paying to execute your day-to-day investment transactions will needlessly drag down your investment returns. Failing to rebalance. The start of the year is a traditional time for investors to rebalance their portfolios by trimming your overweighted positions and reallocating that money to lower performing investments in your portfolio that you still believe have potential. You can sell high and buy low, which is a winning formula for long-term investing. Avoiding real estate. Real estate had an absolutely amazing 2021, with many regions up over 20% for the year. The American economy is still growing rapidly, in spite of inflationary pressures, supply chain issues, and labor shortages, and there's still stimulus money floating around in the pockets of individuals and businesses that will likely be deployed at some point. All of these factors should support higher real estate prices in 2022. Chasing performance. Chasing performance has always been a dangerous investment strategy, but heading into 2022, it can be even riskier than usual. If you feel the need to take a flyer on these types of investments, just keep them at a small percentage of your overall portfolio. Putting all your eggs in one basket. Failure to diversify is one of the cardinal sins of successful long-term investing. Although you may be able to pump up your returns over the short term by picking a hot stock, the risk to your long-term portfolio is too great. You may temporarily double or even triple your money, only to see those losses evaporate as you wait and wait for the stock to make another new high. Investing without a written strategy. It's easy to think that investing is like a casino, but in reality, the long-term returns of the stock market are pretty reliable. The way human nature works, everyone wants to be in the market when it's making new highs, but no one wants to buy it if it's dropping to new lows. If you stick to your written investment strategy, you can avoid making ill-timed investment decisions and instead stick to the path of long-term financial success. Overtrading. While the advent of $0 commissions to trade stocks and ETFs has no doubt been an overall benefit to investors, it's not without its drawbacks. For some investors, not having to pay anything to buy or sell a stock can lead to overtrading. Buying and selling securities frequently not only carries the risk of tax consequences, but it also tends to damage long-term returns. Becoming emotional about stock. Never get emotional about stock. It clouds the judgment. Keeping a cool head both in times of panic and euphoria can help prevent you from making bad investment decisions at the worst times.